Our housing market is facing an affordability crisis, and this is why Zillow has just come out and released a brand new 1% down payment mortgage option to make it a little bit easier for home buyers to go out and buy a home. But that doesn't mean it doesn't come with any risks. Let me read you what Zillow had to say about this. They said that, quote, most markets are in the midst of an affordability crisis, and saving for a down payment remains one of the biggest barriers for many potential home buyers. Now, they're not wrong. Getting a down payment to buy a home, especially, let's say you want to buy a $500,000 home and you want to put 20% down, that's $100,000 you need to save to buy the $500,000 home at a time where home prices have been growing faster than wages. So if you want to save 20% to buy a home, it is difficult, 100%. It's one of the biggest barriers to buy a home, absolutely 100%. But why is that a barrier in the first place? Why don't we have 0% down payment mortgages? Well, the reason why we don't have 0% down payment mortgages today, or at least the way we don't have them now as before, is because when people don't have any skin in the game, they don't have any equity in their homes, they're more likely to leave if things go bad. That's what happened in 2008. Lots of people had homes with 0% down payment mortgages or very low down payment mortgages. Home prices fell. They were no longer able to make the monthly payments. And so instead of mailing in the next check for the mortgage, they just mailed in the keys and said, we don't want to deal with this. We'd rather just go and do something else. So that's the risk with a low down payment mortgage. But this is where Zillow is saying that they are trying to address the affordability crisis in the housing market. Now, currently, this 1% down payment mortgage program is only available in Arizona at the time of me recording this video, but Zillow has come out publicly and said that they do want to expand it into other markets. This is kind of like their test. But if we talk about this whole idea of affordability, the question is, does an easier down payment make buying a home more affordable? Because if you go out and you buy a home with a 1% down payment, what does that mean? It means you need less cash up front to go out and buy the home, but that doesn't mean that the home is cheaper. In fact, it actually makes home affordability even worse because, well, one of the things that impacts the price of homes is demand, right? The price of homes are determined by supply and demand. We have the lowest supply of homes really ever. So we have such a low supply and demand is slowly coming down because mortgage rates have gone up so quickly. However, even though demand has come down, it's still higher than supply, which is why we're still seeing this big kind of craze in the housing market. You have so little supply and demand is falling, but it's still higher than supply. Now, if mortgage rates fell, what would happen? You'd see a whole flood of buyers enter the housing market wanting to buy a home because they want to take advantage of the cheaper mortgage rates. That's not what's happening today, but Zillow is saying, let's make buying a home more affordable. If you make buying a home quote unquote more affordable, right? You need less money for the down payment. What happens? More people want to go out and take advantage of it because they say, oh, I don't need $100,000 to buy this home. I can buy this home with, let's just say, $5,000. $5,000 is a lot more achievable than $100,000. So now you could have potentially more buyers. If you have more buyers, that means more demand. If you have more demand without more supply, because a 1% down payment mortgage is not going to affect the supply side of homes, it's going to affect the demand side. If more people want to buy homes, what's that going to do to home affordability? Well, if you have more buyers than more sellers, if you have more buyers than sellers, that means more buyers are bidding against each other for one of these homes, which then ultimately pushes home prices up. So, home prices are determined by supply and demand. When you have more demand than supply, that pushes home prices up. And when Zillow was trying to fight home affordability, this crisis, by making it easier for people to go out and buy a home, it makes it easier for people to go out and buy a home, but it does not solve the home affordability issue. Now, of course, part of the reason why Zillow wants to do this is to incentivize people to go out and actually buy homes. They're hoping they can move more inventory, especially because Zillow has seen their home sales drop significantly. Zillow reported that revenue in its mortgage business was down 17% year over year. And this is from second quarter of 2022 to the second quarter of 2023. Why? Because, well, the demand for buying a home has fallen, but supply of homes for sale has fallen even further. And this is where understanding the risks with the 1% down payment mortgage is very important to understand, especially as a consumer, because at the end of the day, it doesn't matter who's giving you the mortgage. The mortgage banker is in the business of just trying to sell you a loan. That's how they make money. It is your job as a financially educated person to know what kind of mortgage you can afford and what kind of mortgage you should get, because you are going to be the one that's left with the bill, and you're going to be the one that's left with the payment, and you're going to be the one that's left with the home, even if you cannot make the payments. It is not your mortgage banker's duty to look out for your best financial interest. Although it should be, but that's not what it is. And this is where you have to be the one that's financially educated and understand that if you're putting very little money down, why are you doing that? Is it because you can't afford the home? And if you cannot, maybe you shouldn't. Maybe you shouldn't go out and buy something that you can't afford. Because if home prices do fall, you don't want to be the one that's left holding this home that's potentially underwater with no skin in the game, with a monthly payment that you can't afford. Now, we've been covering this in Market Briefs. Market Briefs is my free financial newsletter. If you haven't joined Market Briefs yet, well, it's an easy and free way to stay up to date on what's happening in the housing market, the stock market, the general economy, and the global economy. You can read it in less than 5 minutes every morning, and it's completely free. So if you want to read Market Briefs, I got the link for you down in the description below, or you can also go to briefs.co/market. That's briefs.co/market. And this is where now Zillow put out over the weekend their prediction that they are expecting home prices now to rise faster than what they thought before. The Zillow economists are now expecting national home prices to rise by 6.5% over the next 12 months. And the reason why is like what I've been talking about: low inventory of homes coupled with demand that's still there. And here's what Zillow had to say, quote, "Limited for sale inventory continues to push home prices upward even as mortgage rates remain elevated." So home prices are going up still in many pockets around the country. In some places, you are starting to see home prices begin to fall, but in a lot of pockets, you're still seeing home prices rise. And this is where Zillow is saying, well, now it looks like home prices will continue rising because people just keep buying homes. The Federal Reserve Bank is wanting to cool down the demand. They want to cool down inflation. They want to cool down home prices. They don't want home prices to fall. They just don't want them to rise as quickly. This is where the Federal Reserve Bank is trying to raise interest rates to make it a little bit more expensive to buy a home, or a little bit more difficult to buy a home, that we have less demand. But people just keep wanting to buy a home. And this is why the Federal Reserve Bank is saying, well, we might have to keep raising interest rates higher than expected. So on one hand, we have interest rates that look like they're going to be going higher than expected. On the second hand, well, we're not seeing that real slowdown in the economy or the demand side of things like a lot of people thought. And so home prices are still rising. And this is where Zillow is saying, well, it looks like home prices are going to keep rising at least over the next 12 months. And on the third end, we still have this super low inventory of homes available for sale. Zillow says that just over half as many homes were listed for sale in July of 2023 compared to July in 2019. And we have 29% fewer new listings entering the market in July 2023 compared to the year before the pandemic. So not only do we have a low inventory of homes, we have less and less inventory entering the market. And this is where understanding now supply and demand is going to help you to understand how the housing market works, because the price of homes depend not on interest rates. They depend not just on the economy, they depend on supply and demand. Interest rates affect demand. The economy can also affect demand. But you also have to look at supply. Why are people willing to sell their homes? Why do people want to sell their homes? Are their homes being built? Are people being forced to sell their homes, aka foreclosures? We're not seeing foreclosures right now. We're not seeing homes get built fast enough, which is creating this inventory shortage. And then people don't want to sell their homes, because if you sell your home when you have a 4% mortgage, well, that means you're going to have to go from a 4% mortgage to a 7.5% mortgage, which is really unattractive to a lot of people, which is why you have such a low inventory of homes that are available for sale, which is creating this huge shakeup in the housing market. And this is where, again, I want to caution you from the data that you read, because every single person is going to have some sort of bias. A mortgage banker is going to have the bias of wanting people to go out and pull cash out of their homes, and they're going to have the bias of wanting people to go out and buy homes as much as possible. That's why Zillow is now extending this 1% down payment program, or they're trying to expand it even further. Realtors are going to have a similar bias where they only get paid if people are buying and selling homes. So they're going to be very optimistic that people will be selling and people will be buying homes like crazy forever. Investors are going to be hoping that real estate prices will fall, because that's going to give them the ability to go out and buy more homes. Your job now is to understand the markets, understand what's going on, understand the educational side, and make smarter decisions for yourself, because at the end of the day, what we know is that interest rates are much higher than where they were 12, 18 months ago, and it looks like interest rates will continue to stay high. And if interest rates continue to stay high, that's going to put downward pressure on the housing market, but you have to be patient. Home prices move up faster than they move down, and home prices are just generally a slower moving asset class, so you have to be patient if you want to be able to find the best opportunities. But just understand how demand and supply play a part in the housing market, and then be patient and ignore the emotion, because there's a lot of emotion out there, especially when you look at the traditional media, which is one of the reasons why I created market briefs, to help you stay up to date with what's going on without all the emotion.